So retail traders think they got the Fed pinned up against a wall. You can't keep tightening. Look at this market. Look at what's going on. Inflation, summation. Forget all of that. You gotta pump it. You know you want to pivot. You know you want to do it. Or are they about to get burned? Let's talk about it. The S&P's been a rough one to trade, getting small burns throughout the week here. We did have a little win in this sell-off here, setting up some weeklies around the 410 range. Ended up melting to 413, held those into next week. Still feeling pretty confident there. This market's disconnected from its fundamentals. Lots of people think that the rally will continue, but I can't help but feel like that they are well misplaced in their beliefs. Smart money's still on the sidelines, holding cash. And lots of people say, well, this means that they're going to deploy and the rally will continue. Smart money doesn't chase you, though. You end up chasing smart money. If the hedge funds want better purchases, you best believe they're going to get them. In other parts of the market, though, we've had some great performance. If we look over at Energy, XLE's been doing really well. Of course, if you've been trading oil through USO, you've also been enjoying this with a little bit of capitulation into Friday. A lot more choppiness here in general. That's why I've been liking XLE. If we look at CCJ and uranium, wonderful performance here. Beat earnings by 1,500%. Imagine that. Who could have predicted that? That was totally from left field. That's sarcasm. We predicted that. Uranium's in a huge price squeeze. I expect this to continue. And right now we're looking at UUU. They reported earnings on Friday. We still haven't got the numbers there, but I'm expecting them to do really well as well. And then at UEC, if we look over here, this is another company that I'll be looking forward to in the upcoming future as well. This is another company where the CEO was buying spot uranium, even though they are a uranium producer and uranium miner. When you see them doing that, it means we've got a smarty smart. What am I trying to say? A smarty smart tart that's running the company, and they're noticing that a price squeeze is coming and trying to take full advantage of it. That's what I like to see. And I should add that I did de-risk out of XLE a little bit. We still have an allocation though, so I'm still getting the benefit of this rally. However, the position is not as large as it was in previous rallies in the sector for oil specifically. I still like uranium. I'm fine holding term oil and uranium because I have a much larger time horizon there, and I have much better fundamentals there. Remember, we have a really like 10-minute full DD on uranium and why I think will be a multi-year price squeeze here. But when it comes to oil, it's a little bit more uncertainties for me because we don't know how deep this recession will be, and I don't know how bad the capitulation will be here if the whole market decides to turn. So still taking some moderation here when it comes to getting exposure to this rally. Now, if we look at one of my favorite biotech companies, CRISPR, remember I said I was kind of taking some profits here, looking for a pullback. We start seeing that play out right now. And remember, biotech is having a pullback in general. If we look at IBB, we can see that the whole sector is starting to pull back a little bit. It's not much when you look at the broader ETF here. However, remember, this is covering a lot of companies, so it's going to have some de-risking through that diversification. But also, the rest of the market is rallying while biotech is pulling back. What have we talked about in the past? Biotech tends to front run the market moves. This will start to turn before the market does. And to me, it's providing yet another warning sign. So before I break it on some fundamentals, let's go ahead and just look at the daily graph because I think this is going to paint the best picture. If you look at your 30-minute, 1 hour, it's obviously a very overbought market that seems to be losing some of its momentum. Buyers are getting really weak. But if we pull out this daily graph, I think this is when we really start to paint a picture. If we look at the last time the market was getting this overbought, it was at the end of March. And we could see that that led to, the peak of the TTM squeeze here before we got these major drawdowns that lasted for months. All right. We still have not hit a high like this, and we're already even more overbought in this current market at a much lower level, indicating that this is definitely just a bear rally that is not going to have any legs. And for it to actually get legs too, you have to remember this market would have to climb well above 420 for us to consider this an actual bull rally. People are getting a little excited about short-term price action, but you can't let short-term price action dictate your fundamental analysis. Lots of traders get caught up in this. They'll look at the daily graph and they'll say, wow, it's a bull market just off one rally of one day when they've been in 6 months of bearishness. Don't fall for the trap. And so further indication, in one way this market could be playing out right now, if we head over to the Elliott waves, we have our ABC wave here, then wave 1, 2, 3, 4, which would indicate that we're about to enter a pullback to the 396 level before we develop that fifth wave, develop a new pattern. This relatively plays well into what we could perceive as a rally into the elections. We could see the fifth wave develop here and then a corrective pattern through these months that are historically terrible for the market before developing another fifth wave pattern into the elections. You could also view this as wave 1, a complex wave 2, and then a wave 3 development. Remember, Elliott waves are not a science, and so we'll need to see this play out a little bit, and then I'll go ahead and do this Fibonacci retracements and see where that could potentially play out. Remember, in the Discord, I'm always trying to develop these and post different charts and data. So now let's head over into the fundamentals. Hey, wow, that sounded terrible. If you're enjoying the video so far, go ahead, leave a like, maybe subscribe, ring that bell. Even though this is no bell trading, we want to keep you updated on what's going on. So every once in a while, we'll ring a bell, but doesn't mean we're closed. Okay, be honest with me here. When's the last time you actually planned out your spending, your finances, or planned for your retirement, or how to preserve the wealth you already have? Listen, you need to call Rob Reed. There's no one better. Learn about different investment strategies to help you create or preserve your wealth. It's for your success. You know you need to get it done. I know you've been pushing it off. But honestly, learning about index-based life insurance, which is basically like a rich man's Roth IRA and allows me to be my own bank, was huge. So if you want to learn more, call the number above or visit cwrpcg.com. So let's talk about this joke of an Inflation Reduction Act that the government is rolling out. And just to give a wide 50,000 view of this doesn't even fundamentally make sense as inflation reduction in the short term whatsoever, even if what they want to play out actually plays out. Remember, taxes aren't immediate. Taxes are annual. So if we are thinking that we'll get the money back through taxes, this still won't be inflation reduction in the short term because you're still just providing $433 billion worth of stimulus into the market. So this is more like the inflation stimulus followed by future reduction potentially act, which I guess isn't as catchy whatsoever. But it's also another great example of how they just come up with a broad-based titled name and then they just shove it full of stuff. And honestly, if you start to break down some of the spending for, let's say, this Energy Security and Climate Change Act, it looks like a bunch of checks are being written out to special interest groups that the Democrats like. And, you know, nothing new there. That's what always occurs. Special interest groups get theirs because they do the biggest donations. And I bet if I broke this down for who the biggest donators are, I bet we'd see that they're getting the biggest checks written for this new Inflation Reduction Act. However, this is just so silly, and we've also seen lots of new articles come out talking about the silliness that's occurring, statistically indistinguishable from zero. Wharton study finds Inflation Reduction Act has no impact on inflation. So I think it's easy to say that I'm not the only one calling this out on its BS. And speaking of BS, I did a short on this already about how the government has now redefined recession to say that we're not in a recession. What I didn't expect was how quickly people would be to latch onto that and say, oh, see, definitely, the jobs numbers are good. But are the jobs numbers good? You tell me. Anyone could look at this chart and see that the trend has started to regress. Jobs numbers are coming down, not continuing to go up. And in a recession, I expect to see more job cuts as well. Even Senator Elizabeth Warren has come out and said that the economy is definitely starting to slow down. And lots of people would turn that narrative right on its head and say, well, see, that means the Fed needs to pivot and help the regressing economy. But you need to put this straight. They're changing the definition of recession so they don't have to do that. So they could say, well, look, we don't need to do that. And they can even look at the good performance in the market and say, hey, it's doing great. They want us to tighten more, obviously. And if we look at the PCE numbers, inflation isn't even starting to come down yet. So we need to further make sure that we're paying attention to this and that we're taking all the factors into play. For the Fed to pivot, This market needs to be crushed. Inflation needs to be coming down. And we can see that further iterated in polls that have been taken as well. The president's approval rating correlates strongly with gas prices. What is a more important problem facing the U.S. today? Most people say it's inflation, not jobs numbers. What is most responsible for the recent rise in gas prices? People overwhelmingly say it's the Biden admin's fault. These are the things that the administration is focused on. The administration is not worried about a recession, hence why they changed the definition so they don't even have to address the issue. So you gotta remember that they're caught between a rock and a hard place, both the politicians and subsequently the Fed. Every past Fed president and their biographies have written about how politicians have pulled them aside and said, hey, you got to do such and do things this way to help my political party. This is nothing new. This is not conspiratorial. This is just reality. Which leads us into the economic data for this week, because we're going to get our ISM manufacturing data. This is a key indicating factor for the U.S. economy because it shows what the demand is for manufacturing. Remember, we want demand to be coming down to tackle the inflation. If not, it will give the Fed decent reasoning to then even hike more aggressively on this market. So this data could be a big market mover. It'll be important to pay attention to. Then we have our job openings. Fed Evans will talk. This is going to be interesting to hear the Fed speeches after Jerome Powell's speech. I think there was a big split between how people viewed that speech. Lots of people were saying it was very hawkish, and some people were saying that was dovish. I'm definitely leaning towards the hawkish side and confused about the dovish perspectives. However, it's important to note that it was a very torn perspective for how people were reacting to it. We get more of our ISM, but non-factoring numbers as well. That'll be important to watch. Balance of trade should be doing well for the U.S. with the dollar continuing to rise. On Friday, we also then have our unemployment numbers, and I'm expecting these to rise in the coming months with the recession here. Expecting more job cuts as well. Sorry, that was a little bit of a weird transition, but I'm doing things a little bit different this week. So if you want to hear about the earnings calendar and what I think about companies upcoming this week, make sure you tune into the video that will be coming out later today as well. But this will be it for the Sunday report. Remember, if you want to join the community, you can find the Discord link below, and I hope you enjoyed this report. I'll see you later today.